What's up, guys? Welcome back to another episode of Rawstocks. This is Rustik, and today we're going to be taking a look at Tesla's chart along with some other tickers. Going to look at where price came from, where price headed today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the links in the description below. Link to the Rawstocks Trading Discord. Currently, we got a 1-month free promo going on. Jump on it while you can. Prices are going to be raising on the Discord in half a month. Also got links to black box stocks if you're interested in options trading data. I know we run some of it available for the premium members. We have post updates using black box stocks and Gamma Edge. But if you're interested in having it for yourself so you can follow along with all of the other tickers, check out the link in the description below. So now we got Tesla's chart up. And you can see that we've just been kind of sitting in this bull pennant or bear pennant kind of pattern, a little bit of a triangle here. And we're looking to see if we're going to break up or break down. So on the daily chart, you can see we're below all the moving averages, below the 20 period, the 50 period, the 200, we got the 100 below that, right? If we were to see this break up, which right now RSI looks like we're going to break down, typically bear pennant patterns break down. So if we were to break down, we'll talk about that in a minute. But if we were to break up, where are we likely to head? So if we were to break up, we'd likely punch through that maybe above the 20 or the 200 period, right? That would put us back in this, I'll show you in a minute, but this larger, channel that we've kind of broken down out of, right? We might punch back up above that, potentially back test that 200 period or that channel support, and then push up into that bearish fair value gap, right? That'd be my likely target if we were to push up. We also have a new week opening gap inside that, and this is a daily chart, so this is a daily bearish fair value gap, right? So we could push up there, right? And again, that would put us back in the channel. Let's take a look at that channel. So right now we have that breakdown of the channel, right? We have this channel here connecting these bottoms. We've only had one top, right? The top doesn't connect to another top over here. If we connected these two high points, it'd be like a reverse wedge, I guess. It's like a megaphone pattern, which wouldn't expect it to play out to run at the top of the megaphone resistance line. So we'll go with this channel having two bottoms, right? And so we broke down below that. Now we're back testing it. We've tested it a number of times. If we can't break through that, we're going to drop down to our liquidity level, right, which is 167.84. We do have some, consolidation here, which could offer support and find us not going any lower than maybe like 177, 178, high range 191-ish, right? There was a lot of activity back in this area. So we could just come down, swipe the low here, 181, right? Something like that. Doesn't mean we have to push all the way down to 167, but we could. Right, and then we have further liquidity all the way down at 138. I don't anticipate that drop necessarily, but those are our levels if we're watching for them. Right, but now if we break up, we're back in that channel. We might back test the channel, right? Hit that resistance on that, down sloping 20 and 50 EMA, right? And then come back, test the support of the 200 and see if the 200 can push us back up. Once we push back up, if we can clear that fair value gap, right? Get back up into these upper parts of the channel of the this is the lower quadrant or the lower half of this channel. If we can start pushing back up, we might see resistance once we hit that median, right? And we could cycle back down before we run up even higher, or we could just push back through above it. Next time we run at this order block, we're going to take it out. So let's go ahead and drop into the 1 hour chart, see what the 1 hour chart has cooking. So if we blow up the 1 hour chart, you can see we've kind of made a run at this new week opening gap. This came from that sell-off with the Bank of Japan news. You can see a little bit better here, that support level. You can also see the resistance level here with these tops. You can see currently below all the moving averages. When we were dropping this morning, I thought we were going into a sell day. It kind of looked like that. I announced to the Discord, doesn't look like a perfect, directional down day or sell day, just because of where I'll throw it up here, but I'll throw it up on the lower time frame, just because the New York AM pre-market session did not get back to the 50% of the London range So I said it doesn't look like perfection, but we might be getting a sell only day. First target was this 15-minute fair value gap, right, which we hit. We hit the consequent encroachment of it. We found support. Ultimately, we rebounded and kind of had some inside range macros for the lunch and the PM session. Now, I was also targeting this lower 15-minute fair value gap, which starts at 193. We'll just call it 193.50, all the way down to 191.25. So still targeting that if we were to drop, start to see a breakdown, right? As we're again still coiling inside of this triangle pattern or this bear pennant, right? If we were to see a pop back up, we might just fade, hit the support level one more time, rip up on the PPI data and break out of this triangle to the upside. We know what those targets are, right? Here we have our new week opening gap for this week, and you can see inside of a bigger new week opening gap for the previous week. So we've already drawn into it and come back down. Typically with new week opening gaps, we're buyers below the new week opening gap. We're sellers above the new week opening gap. Right at the new week opening gap, hard to tell direction. So you want to look at your bias for the week, right? Right now we're trading below and we're in a move down, and we potentially could be seeing additional downside to take some of those sell side liquidity targets. So we'll see if this fair value gap holds the support once we get down there, or if we're going to target maybe the order block that's sitting down here at 181.50. We jump into some shorter time frames, we could take a look at some potential entries. Okay, here we have our London range, right? Here we have our New York AM macro. This is our pre-market macro. What I like to see on a directional down day is I like to see this London range be set, fade the London range, right? Then New York AM, we really want to see it come up to the 50% of the London range. That's right here, 201.30. We didn't hit that. So when I thought we were getting a sell day, when we got this fair value gap here, I thought we would get the sell day, but you can see we came down, we hit that 15-minute fair value gap, we bounced, right? We came back down, we tested that support level again of that triangle, right? And found support there again. And you can see the inside macros for the lunch and the PM inside the London silver bullet. Never came back up and tested this fair value gap, right? Again, we're just coiling on a 5-minute chart. We're below all the moving averages, so we could see us drop even more. Now, again, if we want to take a look at some of our smart money concepts entries here, okay, we had that, basically that open candle or that fair value gap come as we opened the market, right? But then we got another fair value gap here, and we'll take a look at that real quick because that would have been your sweet spot entry, right? Using smart money concepts, there's a 5-minute fair value gap, right? Set between these 3 candles. We pop back up to consequent encroachment, perfect entry, low risk, right? We know we're targeting the 15-minute fair value gap. So if you were to use your short tool, right, and you nailed that entry, you could potentially run your stop really tight, target that fair value gap of some sort, 12.88 to 1 risk reward ratio. You could bump it up to the New York AM macro high. Still, it's a 1.45, right? You could have put it here at this old fair value gap, 2.4 risk reward ratio. Either way, stop would have never hit. You would have hit your target, would have been a nice play. We called it out in the Discord. We ended up getting, I think about like 21 or 25% on that trade. And now you get a second turn. Take that same fair value gap. If you took it, we didn't take it in the Discord, right? But we popped back up to that fair value gap. We rejected it, came back down, tested the levels inside the 15-minute fair value gap, right? Tested that support trend line of that bearish pennant, right? And then we found a pop. But double whammy playing this fair value gap today. If you got both of them, congratulations. I know we got one of them for sure for the premium members in the Rawstocks trading Discord. You can also take a look, that's a 5-minute chart. You can also take a look at the 1-minute chart. You can use the same kind of smart money concepts to take your 1-minute entries, right? We often look at the 1 minute, we look at the 3-minute, or we look at the 5-minute for our sniper entries. You can see here, we get a nice fair value gap, right? We draw into it, we draw into it, we draw up to it. You get 3 opportunities to take that entry. Could have ran it as scalps. You got your daily open price here, right? Or you can run it to additional liquidity, again, back at the 15-minute fair value gap, depending if you're trying to run scalps or if you're trying to run a little bit bigger trade, right? Then on the rebound, if you're playing the upside, we get another 1 minute fair value gap there. We don't quite dip down into it, so you may not get an entry there. Other than that, get some more fair value gaps here that we pop back down to, right? Could have caught it for a nice little rip, back up to the 200 period moving average, or again, back up to that liquidity target of that fair value gap. So lots of different ways you can use those smart money concepts to your advantage to be taking sniper trades or bigger trades, using fair value gaps, using order blocks, even breaker blocks, just different things, different smart money concepts. Definitely want to be watching out for displacement candles. As we drop down here, you see a nice displacement up here, and you start getting bullish displacement to the upside, right? Once we start getting that displacement to the downside, we're looking for additional downside targets. So here you start to get some bearish displacement, right? We pop back up, almost consequent encroachment of that fair value gap. Okay, and then we deliver again back down to that liquidity target. So if you didn't catch that fair value gap here, could have caught another fair value gap for a nice little scalp. So concepts do work if you understand how to take the entries and the exits, and depending on whether you're looking to run the trade a little bit longer or you're just looking for those quick entries and those quick exits for anywhere from like 10 to 25% on those trades. Let's jump over to QQQ. We're just going to look at the 1 hour chart on QQQ. You can see we're above the moving averages here. We caught a nice sell down on QQQ today. I think about another 25% on that trade. Took 5 contracts, called it out for the premium members in the Discord, right? But at this point in time, we're above the 3 of the 4 moving averages. We might find rejection again here at the 200 period. It is starting to flatten. RSI, above the 50, pointed up. Could see this move up. Could target, potentially 463 up to 465. Right, we know that there's some fair value gaps up there. We know that there's a new week opening gap from a previous week, right? So if we can get above that 200 period moving average at 453, 454, right, we can make a run up to those 460s. Could be this week, could be next week, right? If PPI or CPI come out and they look negative, or the market takes it negatively, we're just looking for sell side liquidity, right? So we're looking for a move down, right? Maybe this fair value gap, maybe this fair value gap. Maybe additional target down here at 430. So I do want to pop over and take a look at some gamma for QQQ. Let's pull up QQQ here. Take a look at some 1 hour gamma here. You see a lot of negative gamma built up. Now this is going to include more than just this week's. If we pop over and take a look at the gamma on QQQ using Gamma Edge. Gamma Edge can be found on the WAP server, same as Rawstocks trading Discord if you're interested in becoming a premium member. Gamma Edge is $100 a month, but it provides you a lot of information that Black Box Stocks doesn't. So if we take a look at Gamma for and Delta for tomorrow, you can see we have our negative gamma high and a positive gamma high down here at 450 and 449. We also have some positive delta starting to build up upwards of 455. But we'll see if we can get kind of through this, 451, 452 area. Dealers at that point might be motivated to try to push it higher. A lot's going to ride on kind of this PPI report for tomorrow, CPI on Wednesday. So we can also take a look at 452 being gamma high. Got a lot of positive delta built up for Wednesday. So it looks like the market, potentially options market for QQQ is a little bit undecided for tomorrow. Looks like it could be positive moving into Wednesday. So that would be in line kind of with our PO3, our smart money concepts. Tuesday being manipulation, Wednesday being distribution. This could be in line with that, where we maybe see a drop tomorrow, and then we see us push up Wednesday, potentially even into Thursday. Look at the Thursday gamma, Thursday delta, right? Looks pretty good to start making that move up. So we might catch that distribution on Wednesday and then even into Thursday. We look at Friday gamma. We're kind of within this range, 450 to 456. Right? We do have some positive delta up here. We also have some negative delta at 455. So I would expect that we'll probably get hung up between 455 and 458 if we get moving upwards. Jumping over to SPY. SPY looks, pretty strong. Although the RSI looks like it could roll over and we could start to see a dip. We are above the 200. This is a daily chart. We are above the 100, and we're coming up on the 20 and the 50. Right? We got this large daily bearish fair value gap. Right? We're pretty close. We might run up, potentially hit those moving averages, come back down, see if the 100 can be support for us, or see if we come back down and take sell side liquidity and run into the 200 period moving average. Again, we came down, kind of flirted with it, but didn't hit it. So looking for this bearish fair value gap to potentially offer our first point of rejection, right, where we might cycle back down and then see a move up. I am looking for a higher high on QQQ and SPY going into the end of the year. So whether we get another leg down or we push up to that higher high, I am expecting a higher high over, or maybe even an equal high over the next 4 months or so. Pop over to Nvidia. Nvidia looks all right. We're finding rejection on the daily chart at the 20 period, right up by the 50 period. Right, we're above the 100 period. We again, just like SPY, came down and kind of flirted with, failed to deliver on that order block. Right, RSI is starting to point up, but we do have this kind of aggressive resistance line. If we can get above that, and I'll mark it out with our path tool. If we can get above that, right, maybe make a run at this buy side liquidity at 120, potentially come back down and test these moving averages, we could run up and see this less aggressive support line up in the mid 120s, right? And at that point in time, we would have taken a lot of the internal buy side liquidity, and we might reject there, come down, potentially test that 88 level, that order block we were looking to hit, but see this cycle up, set a lower high, just kind of a series of lower highs, right? And then see if we come back down and we hit that order block, or maybe we just take some internal buy side liquidity and then start pushing up to a new high on Nvidia. Nvidia is definitely not out of the question to run a new high into the end of the year. I'll take a look at Meta. Meta has been, doing really well. Looks pretty strong. Might see RSI turn down a little bit. Might see us turn down a little bit on price just here recently. But you can see we got that earnings, jump. We kind of sold down on that Bank of Japan news, and we've been rallying up ever since. Would be looking for Meta to make a run on 542.45 on that old high. But first we got to get through 526.89. So that's what we're going to take a look at today. Hopefully this has been helpful. Don't forget to check out ICT. His new 2024 mentorship is online. That's where I learned. The information's all free on there. Again, if you're interested in joining trading Discord, Rawstocks trading Discord is free to join. Cheap for premium members if you want the call outs and the options data and some of the other things we offer. But even if you're not looking to pay any money, you can just come hang out. We got a great community full of traders. Even some call outs happen from some of the advanced traders on the Discord in the free section. So maybe you can even snag a trade there. But don't forget to like, subscribe, share with all your friends. Thanks for watching, and we'll see you guys on the next one.